If you're trying to get approved with Truist in 2026 for yourself or one of your own client, this is the video that is going to save you from the mistakes that 90% of funding consultants are still making with this bank. Because Truist is still one of the best banks in the game, but the rules have changed. And the people who are still getting those $2,000 approval on a strong profile, and the ones getting weird follow-up letters and they start panicking, and the ones getting denied for no reason that they cannot figure out, almost all of them are still applying the way that they did in 2022. And in this video, I'm going to break down three things specifically. The inevitable banking cap rule that explains why Truist sends tricky letters that can lead to financial reviews and how to plan around it. The trick that lets you season a Truist relationship in half the time without opening anything new at the branch. And the exact sequence I will run on a client today, including which card to go after and which one almost every consultant gets wrong, plus everything else, the footprint, the bureau, the line of credit, all of it. Hi, my name is Clarissa and I run a coaching program for credit and funding companies and a white label fulfillment company that funds clients for other funding companies behind the scenes. So it's safe to say I'm a good resource for you to learn how to actually fund either yourself or your own clients. If you've been before, you know the format. If you're new, welcome. Let's get right into it. So here is why Truist should still belong in your funding sequence. So it sits in a sweet spot that most banks do not. Okay, it is not a tiny credit union with no real lending power, and it's also not so massive that the underwriting is super rigid like the Big Four. It is a regional bank with real money behind it and more flexibility than most people can give credit for. That middle ground is where some of the best funding opportunities in this industry still happens. Truist, Citizens, KeyBank. These are the banks that fund the deals where the big one may reject it. Truist has been one of the most lenient banks in front end of funding sequences, which means that you can build a relationship. Now it's going too fucking fast. Now here's why Truist should still belong in your sequence. It sits in a sweet spot that most banks do not. It's not a tiny credit union with no real lending power, but it's also not so massive that the underwriting is super rigid like the Big Four. It's a regional bank with real money behind it and more flexibility than most people can give credit for. That middle ground is where some of the best funding opportunities in this industry still happen. Truist, Citizens, and KeyBank, these are all banks that most of the times accept deals that the big ones are rejecting. Truist has been one of the most lenient banks in my credit card stack sequence, which means that if you build a relationship correctly, you can get real approvals from them before even the big banks take you seriously. But now, lenient doesn't mean lazy. If you apply it the wrong way, you're going to get punished. And now let me show you and explain more what I mean. First thing first, Truist is not nationwide. So Truist is available in North and South Carolina, Virginia, Maryland, Kentucky, Tennessee, Georgia, Florida, Alabama, Indiana, Ohio, Texas, New Jersey, Pennsylvania, and the District of Columbia. So if your client is not in their footprint, this is not going to be a good move for you, period. And I know that some people are thinking, but what if I do a foreign entity workaround and blah, blah, blah? Nope. It doesn't work with Truist. They check the ownership, they check the business information, and if it doesn't line up inside of their footprint, the application is not gonna go the way you want to. So if the client is not part of their footprint, build a game plan around a different bank. You don't have to force applying for Truist. There are many other options. Now that we covered the footprint, let's talk about the bureau pulling. Truist pulls from Equifax. This alone changes how you have to think about the file. Most funding consultants are obsessed with Experian and TransUnion and forget that Equifax runs the show as certain lenders. Truist is one of them. So if your client's Equifax is weak, frozen, or locked, or full of recent activity, you need to fix that before applying, not after the denial. What I want to see the bare minimum in the credit profile is 680 and higher, low utilization, no late payments, no charge-offs, no collections, no derogatories, and at least 2 years of credit history. Can people get approved with a little lower, with like a 650 but a thicker file? Yes, I've seen it. Can people get approved with more than 6 increase? Yes, I've also seen it, but you're not building the strategy around the exceptions. We're building it around the cleanest path for the highest approval. 680 minimum, clean, thick, low utilization. That's the target, okay? So if your client is not there, work for that first. Now here's where most funding consultants screw up the entire Truist deal. They have their clients open a business checking account, they pew a few hundred or even $1,000 in it, and then they apply the same day that they open the checking account. And then they wonder why Truist gave them $2,000 approval when the client had a 720 credit score, 8 years of age, and so on and so forth. That's because the same day's approvals are dead at Truist. That window is closed. The reason is simple. Defaults and frauds across the industry exploded over the last 3 years. Every regional bank tightened up on that front, and Truist now actively looks at how you behave inside of their ecosystem before they decide what and how much to give you. These three things matter now in a way that they didn't before. Money in the account is not enough. They want to see transaction history, deposit going in, withdrawals going out, real movement. Time matters. They want to see the account seasons, right? Not for forever, but enough to build an internal profile for the client. The relationship is the leverage. Banks have internal customer scoring that you never see. Truist is scoring your clients whether they know it or not. So if you apply too fast, you get rated as a thin customer or a risky one, and the limit will reflect that. So my recommendation is open a simple business checking account, low barrier to entry, no monthly fees, then run real transaction through it, and at least for 90 days. That 90 days window is what separates the $2,000 approval from the $25,000 approval. But here is what nobody really talks about on YouTube, and this is a way to season the Truist relationship faster without sitting on a checking account for over 90 days waiting. And it's utilizing Livestream. Livestream is Truist's online lending division. If your client gets approved for a Livestream personal loan, even for a smaller one, the amount here doesn't really matter, and make at least one on-time payment, that payment shows up inside of the Truist internal customer profile. Basically, this means that your client is now acting like already a customer in their system, even though they never walked into a branch or they never opened a business checking account. Now, that one on-time payment can pull forward your seasoning window dramatically. Instead of waiting 90 days for the checking to build, you have an active relationship inside of the Truist family in just 30 days. Okay. Now, combine the live stream loan with the business checking account for like 30 to 60 days, and now you have a much stronger internal profile than the consultant who is just telling you the clients to apply the same day. Now, of course, the loan also has to make sense for the client, and if they don't have the need for it, the one thing that you can do to use it for and justify it to your own client is to season future bank accounts that you're going to ask them to use. That's another way to be able to use that money without technically using it, and then they can use it to just pay back the same loan, pay it off faster, so they're not paying too much in interest. Okay, so now let's talk about which Truist product to actually go to and in what order, because that actually matters. So Truist has 3 business credit cards. The first one is the Truist business card, and that one has 0% for 12 months. And this is the one that I always go to first. 12 months of 0% interest is real leverage. The second card is the business cash reward, and that one has 0% for 9 months, no annual fees, has cashback rewards and spending bonuses. And it's a nice card, but for pure funding strategies, I prefer going first for the 12 months, right? If I need to only have a one approval, I'd rather be the 12 months instead of the 9. Now, if your client is going to use both, then that's the sequence that matters. I would recommend choosing first the longer 0% period. Now, the third card is the business premium card, and this one is one of the newest one, and almost nobody is excited about because it doesn't have any type of 0%. It says that it can go up to $100,000, but let me be very, very clear here. It doesn't mean that everybody is getting that 100K. It means that the card has the capacity to go to that high. This is a premium card generally for businesses who are doing over $2 million a year of revenue and strong businesses, but it also has $299 of annual fee, and it doesn't have any 0% intro APRs. So this is not something that I would add or even consider for a funding product because it doesn't have any type of 0% interest. And you have to consider one thing. There is one rule that explains everything about Truist that confuses a lot of people. Truist has a cap for no dog business credit card exposure for $25,000 per business. And that's per business, not per card, per business. So let me give you a real example because this happened to one of my clients recently. We applied for both a Truist business credit card with 0% interest. The first card came back approved for $14,500. So far, so good. Then when we applied for the second one, it got approved again for the same amount. $14,500 plus $14,500, that would have put the client over the $25,000 cap rule. So what happened next is that Truist sent the client an email, and he had 4 options. And they're tricky because they also word it a little bit weird so that they can, it's a little confusing if the first time that you see it. But to put it in simple word, what it says is option 1, choose the existing card and close the first one that we got approved for. So in that case, I would have approved my client only for $14,500. Option 2, reduce the existing card limit and approve the second card for the difference. And then option 3 is submit a full financial review. Last year of personal and business tax returns and a signed personal financial statement completed within the last 12 months. And then option 4, review the new request for the maximum total limit and exposure allowed without financial statements. So basically, The right answer is almost in every case option 4, and here's why. Option 1, like we were saying, it means that it's closing one of the two cars that he got approved for, so it means less funding that you acquire for your clients, and you're burning a product that he could have gotten approved, that he already got approved for, actually. Now option 2 sounds reasonable until you realize that you're voluntarily reducing the limit that Truist already approved you for, and once you lower it, getting it back up is not really that simple. Option 3 is a financial review. So if Truist doesn't like, so you have to send your documents, right? And if Truist doesn't like what they see in the documents, then they can lower both limits, decline one of them, or even both of them. So you just hand them the ability to pull back from the approvals that you already have. Now, option number 4 is what it's what lets Truist set the combined limits at the maximum that they're willing to approve without documentation. So you're not fighting for the cap, and you're letting them manage their own exposure while you're keeping everything else intact. Now, my clients obviously chose option 4, and both cards stayed open. The total combined for the exposure limit settled at a $25,000 limit. Not ideal, but clean. No documents submitted, no review risk, no closed accounts. And this is why I have another video dedicated entirely to that client's full sequence. I will link it below or somewhere in here in the screen. We have walked through the funding sequence that got him $138,000 in 0% approvals, all for 0% business credit cards across multiple banks. And Truist was one of the pieces. If you want to see how the full play was structured, go and watch that next. Now back to the cap. This is why your client gets approved for only $25,000 for them. Now, this is where Truist actually gets very interesting. The Truist Small Business Line of Credit can go up to $100,000. Now, one of the strongest strategies that we have seen on a clean profile is up to $50,000 on one credit line, plus the $25,000 of 0% business credit card. That's $75K at one bank. Often with no tax returns, no P&Ls, no bank statements on the line side. Now, hear me out on this. No doc doesn't mean no underwriting. It means the Truist is using personal credit, stated income, and their relationship strength. They're asking for the documents under certain threshold. So the sweet spot for the line of credit is $50,000 or less. Once you start asking for more than that, then there's the chance to get a low doc or a full doc request, tax returns, bank statements, the whole deal. Now, say under $50,000 if you want the clean route. And yes, in many cases, this happens that with one hard pull on Equifax, especially if you do it in branch. So you could get 2 business credit cards and the line of credit all with one inquiry only. Now, Truist also has a business loan. So there's a difference between business line of credit and business loan. This business loan is up to $50,000. Doesn't have any collateral required, no origination fee, and that is very strong. This is another area where the relationship really matters. If your clients opened the account yesterday and dropped only $200 in it, do not expect anything special. If they have a real relationship and activity and a live stream loan, and then they're using their credit cards on the line, you can heavily use that relationship to get them approved for this business loan as well. Now, there are 3 more things that you need to know before you actually run this strategy for the business loan. Number 1, Truist will pull your 0% interest for the smallest things. A late payment, a delay, a discrepancy. They threat that 0% interest like it's on probation, because it technically is with them. 2, weak or rushed relationship will get you weak approvals. So stop applying the day that you open the account. The $2,000 approvals is not the bank being mean, is the bank rating you as risky. 3, Truist minimum payments can run higher than what your clients are used to with the Chase or Amex. So make sure that you're planning with them for their cash flow, and do not stretch the leverage so far that the monthly payments become a problem for them. So to recap, here is the clean Truist sequence end to end. So first things first, confirm that the client is in the footprint. If not, pick a different bank. Go to get the Equifax file ready, 680 and higher, clean, 6+ open revolving accounts, low utilization, and don't freeze any bureaus. Structure the business correctly, real address, real phone, real email, real activity, realistic data points, and then build the relationship. You can either open a business checking account, start some deposit and real transactions, and then wait 90 days to season the account. Or you can apply for a live stream loan, make at least one on-time payment, and build the relationship in 30 days instead of 90. Now, for best results, and mostly if your client's profile is not as strong as others, do both. Open the checking account, the live stream, and wait 60 days, and then you can apply. When you're going to apply, you should first apply for the card that has the 12 months of 0% interest. then you're going to apply for the one that has the 9 months of 0% interest. Keep in mind that there is a $25,000 cap, so if the second card passes the limit and you receive that email that I showed you before, make sure to choose the right payment where you're allowing Truist to only approve you up to their banking cap without triggering any type of financial reviews. If down the line you want to help your client to get approved for other options, remember you can choose for the business line of credit and or also the business loan if they qualify for it. Now, if you're watching this thinking, okay, this is great, but I don't want to memorize every single bank's rule, sequence, exposure caps, and underwriting stuff all by myself, this is exactly why we can offer you white label fulfillment. You bring the client, you keep the brand, you keep the relationship, and our team handles the funding strategies on the back end that we exist, and all the credit goes to you. If instead you want to actually learn how to run these strategies yourself with every bank, not just Truist, but also learn all the data points that you need to put in these applications, then the Funding Academy is what it's for. It's a 5-day book. It's a 5-week bootcamp style program where for under $100 a month, you can understand every bank breakdown, every sequence, every data point, and all the systems that you need to actually run this offer. Now, here is the bottom line with Truist in 2026. It is still one of the strongest banks in this industry. They are lenient on the front end and they have a strong 0% credit card products. They have meaningful line of credit, and they also have clean business loans options where they don't necessarily require for any collateral. And there is a real room for large approvals when the profile is right, you build the relationship, and you timed your applications correctly. But this is not a bank that you can approach lazily anymore. If you rush the relationship, ignore Equifax, and ignore their 25 cap rule without a plan, then this bank can also limit your money. Do it the right way, and Truist is one of the best banks in the game. I will see you in the next video.